There is a lot of track record in structuring projects and applying best practice in terms of allocating risks in an efficient manner. So that can be put to work in this energy transition effort that is needed, making sure that these projects can attract low-cost project finance, for example, that the risks are properly allocated to the parties that can best manage those risks. So all that experience that exists, that comes from the infrastructure investments that have been structured over the last 20 or 30 years even, can be applied to this sector.
Hello and welcome to Energy Unplugged by Aurora. This podcast features various experts from Aurora having in-depth conversations with key industry leaders, policymakers and academics from all over the world. It explores the hottest topics across the energy market and gives a unique perspective on major energy issues.
Welcome to Energy Unplugged. I'm Anna Barillas, Head of Iberia at Aurora. My guest on the show today is Dulce Mendonça. Dulce is a director and fund manager at InfraRed Capital Partners, where she also focuses on business development and origination of infrastructure investments in Europe. She joined InfraRed in 2013 and has led complex infrastructure investments, and in recent years in particular, has led renewable energy investments in Iberia. She started her career in investment banking and then moved to infrastructure investment about 16 years ago. She has an M.Sc in Business Administration from ISCTE Business School in Lisbon, and she has experience across Europe and Latin America. Dulce, thank you so much for being here with me today.
Thanks, Hannah, for inviting me. It's a pleasure to be here speaking with you.
Dulce, for those of you that might not be as familiar with InfraRed, would you mind saying a few words about InfraRed, what you do, the sectors you focus on, and how you think about investments?
So InfraRed, we are a great team. We have around 100 people. It's a very tightly knitted team working in infrastructure across various funds and both in greenfield and brownfield investments. And this is across both renewable energy and core infrastructure. InfraRed has about 2 decades of experience working in the sector. And this means that we have seen projects from the initial development phase until the end of life. And that has given us a lot of insight and best practice and lessons learned as well. And we have about $10 billion of equity under management and about 200 assets in our portfolios.
Brilliant. And you've been in kind of investment banking and infrastructure investment for over kind of 20 years now. How do you think the investment paradigm for infrastructure investors has changed over the last 20 years? Do you think decisions around what assets to invest and how to mitigate the known risk are made differently now?
It's an interesting question. I think in these 20 years, there has been a lot of change. We have had a lot of lessons learned for sure. In terms of best practice, there is a lot more insight and information to support decision making, which is great. Just taking as an example in terms of power price forecast and, sophistication of the models. And I'm sure you will chime with that. 20 years ago was very different. So that's great that there is a lot more data to support the decision-making process. And so this is one example, but there are other examples. In terms of construction risk, there has been a lot of change in terms of the way projects are managed and construction is managed. These days, there isn't almost nearly no risk premium associated with building new infrastructure projects and energy projects, which would have been very different 20 years ago. So yeah, definitely there has been a lot of change. Also, I would say in terms of the investment class, energy and infrastructure, these days is a quite large investment class, and 20 years ago was something novel, talking of alternative investments and talking about infrastructure as an investment class in itself. So that was still a very innovative idea. I think these days is taken as part of our day-to-day life. It's well known, but was very different 20 years ago, was still emerging.
Yeah, and I want to get to this, to the challenge of the energy transition. But yes, absolutely, as an investment class, this is probably one of the hottest areas now. And in the context of kind of climate change and what's needed to mitigate that, it will be absolutely critical. But we'll talk a little bit more about that. One more question in terms of kind of how you and InfraRed kind of think about this. How do you kind of think about the risk reward trade-off of investments? And obviously that's a really difficult kind of thing to do when you're talking about kind of infrastructure investment and really the opportunities out there to invest. So what's the thought process or the way in which you approach this?
We tend to be quite mechanical in terms of our approach to risk reward, and that is supported by our experience and market data as well. For example, in terms of technology risk, those technologies that are more proven compared to less proven technologies, so we can apply a risk premium depending on that level of risk in those. And the same or something very similar applies, for example, to a pricing exposure to merchant risk, to power price risks, and we apply a risk premium accordingly to each project, the level of exposure to that variable. So we can be quite mechanical in those risks that we understand and we are comfortable taking. So and it is supported by analyses and information that we have.
Brilliant. And can I ask, and again, when you've been doing this for kind of almost 20 years, and with the changes that we've talked about, and how much more sophisticated, I guess, the information and the tools available for decision making have become, one thing that comes to mind is, have you been involved in any investments over the last kind of 20 years or so that you now regret, and more importantly, why?
A very good question, Anna. It's very interesting to think what we would have done differently. Unfortunately, we don't have many examples that, or at least in my case, that I would have done differently. But certainly, some, in terms of the due diligence of some projects, at the beginning was quite difficult to predict the energy yield of a wind farm, for example, beginning of the sector. So I would not say that anyone would regret investing in the sector, but definitely there has been a lot of change and improvement in terms of getting these studies right in the energy sector, principally.
Thinking about, for example, kind of baseload price cannibalization and renewable cannibalization specifically, it's easy to kind of forget that not long ago you were doing this all on the basis of baseload prices if you were looking at a wind investment, right? And now
Exactly.
you have to consider kind of cannibalization, and capture prices as just part of the jargon that everyone looking at renewable investment has to manage. And that's back to the point you made earlier about how the tools available for investment decisions have improved, and forecasting is no different.
Absolutely. We couldn't agree more. Yeah. So we're fortunate to have that available now.
Brilliant. I mentioned that I wanted to talk a little bit about kind of the energy transition, and obviously now, with the global pledges towards decarbonization intensifying ahead of COP26, which is great to see. The scale of investment challenges is getting a lot more press, and Aurora did an analysis not too long ago and put the required investment per year at around $1 to $2 trillion, or 1 to 3% of global GDP, again, per year, in energy and carbon markets alone. So, those are eye-watering kind of figures. So my first question is, do you think that's achievable? Do you think we will get the level of investment that's required to really kind of get to the net zero targets by 2050 and some intermediate milestones as well?
It's a very good question, and I wish I had a crystal ball to say whether it's going to be achievable or not. I think it's a challenge that everyone is embracing, and I see that a lot of involvement, and we see a lot of involvement from everywhere around the world in relation to this subject. So when there is a collective engagement and effort, it's more likely that we will get there. So that's encouraging. Definitely, we have a number of ingredients available that may make this possible, and I hope this is going to be possible because it's for the collective good. But it's definitely a very big challenge. I've recently read the Bill Gates' recent book about avoiding climate disaster and how we can get from the 51 billion tons of greenhouse gas emissions per year to net zero. And one thing that I took away from that, or my general idea about that, is it needs to be a holistic approach and a collective effort from various sectors and not just the energy sector. So in terms of the investment quantum, there is plenty of capital available for infrastructure investments, for energy investments, but obviously it needs to be applied to affordable projects that make sense, that are accretive to the economy, and based on business plans that the private sector can understand. So I think there is a need for governments and policymakers to provide the right investment environment and support these developments. But definitely, I think there is interest from the various areas of the economy, from equity investors, from lenders, to support further investment into the sector.
So what do you think is the role for infrastructure investors in supporting the scale of investment required for the energy transition?
It's a good question. I think that there's definitely a role for infrastructure funds to play in these energy transition. There is a lot of track record in structuring projects and applying best practice in terms of allocating risks in an efficient manner. So that can be put to work in this energy transition effort that is needed. So making sure that these projects can attract low-cost project finance, for example, that the risks are properly allocated to the parties that can best manage those risks. So all that experience that exists, that comes from the infrastructure investments that have been structured over the last 20 or 30 years even, can be applied to this sector. So definitely there is a role, I think, Anna, for infrastructure investors to play in this energy transition.
Brilliant. Now, when we talk about kind of the energy transition and we think about the type of investments that might be needed, of course, we'll continue to need kind of renewable investment. There's a huge untapped potential still for a lot of that to happen. But we're also starting to talk about less proven technologies, at least at the commercial scale, I guess. So what do you think governments and policymakers can do to support investments, from infrastructure investors, but from anyone really, particularly in these less proven technologies?
Yeah, the less proven technologies is where probably the government and the policy makers can help to make sure that pilot projects are put in motion, that some more innovative technologies start to ramp up almost in the same way that we saw with the solar sector and also the wind in early days. So that definitely there is a very valid role there. We are going to decarbonize, say, the transport sector, the industry. So these that are more difficult sectors to decarbonize, I think the policymakers can help there. But only to a certain extent, because then you need to make sure that then these projects and these subsectors attract private capital, and they are then financed efficiently, and that these are affordable in general, and not just using public money to support these developments.
So I wanted to take the opportunity, given the experience that you have in the Iberian market, to change kind of topics a little bit. So for those of our listeners that might not know, you've spent a significant portion of your career actually focused on the Iberian market. And so I thought it'd be helpful to touch on a few things that I think are particularly interesting in this market. Obviously, the first one is solar. You can't talk about Iberia and not talk about solar. There are over 100 gigawatts of solar projects in the pipeline at the moment. Now, this is as context, this is against an installed capacity of just under 11 gigawatts so far, and a government target of about 38 gigawatts for the peninsula by 2030. So clearly, the scale of interest and of just expectations in the sector is massive. Dulce, do you think there is a solar bubble in Iberia, and how do you think the market will evolve?
It's a very good question, and it's very exciting to see after so many years of literally no development in Iberia in renewables, to then see from 2017, 18, starting to see the sector again having development and seeing projects coming into the pipeline. And more generally, just stepping back, I think it's very exciting to see unsubsidized renewables. For someone like us, passionate about energy, to see projects then that can be viable without subsidies. I think it's proving that there is a place for renewables and looking at where these renewables can be best placed, like solar in Iberia or wind in the Nordics, and seeing that, these markets can thrive unsubsidized. I think it's great. Okay, so just wanted to make that observation first before answering to your question about there is or not a bubble in Iberia. I think there was a lot of excitement, particularly at 2017, 18, about developing new projects, definitely. And yes, I think there was a little bit of a gold rush in the solar sector, looking for new or places to build new solar parks, particularly in the south part of the Iberia Peninsula, looking for large land in terms of pieces of land. Like there was a little bit of exciting period of time. There was a lot being developed and new projects coming or being studied. So there was definitely a lot of appetite, and there still remains. So I think obviously COVID probably moderated a little bit the enthusiasm around developing new projects. And secondly, there is a lot already in the pipeline. So definitely the things have calmed down a little bit. And you know, these projects, most of these projects in Iberia, they are highly competitive. So you have very LCOEs in Iberia. So it's affordable energy, which can be produced in Iberia, can be exported. So there is definitely a place for that power, for that generation power generated in Iberia to be, you know, either to support the energy transition or to be exported to the other European markets. There is still potential for a lot more being developed and built in Iberia. Some of these projects may not materialize because, you know, once you have identified the site, there still need to be environmental assessments and all that. So there could be a portion that is not built. Absolutely. But you know, there is a lot of viable investments to be built there.
And you're right. I mean, the fact is that building both wind and solar actually in Iberia is in fact very economic. It is by far the cheapest form of electricity that you can generate in the peninsula. And so it's really exciting to see how the market develops and how different forms of demand will also develop to really make use of all of that. You know, kind of potential in the market. So it is definitely an exciting market. I think there are significant risks to investments in Iberia and something that needs to be analyzed quite carefully, particularly when it comes to solar and the cannibalization risk of solar. But certainly the opportunities are huge. So changing kind of gears to the Portuguese government, I guess, and you mentioned kind of hydrogen before as one of the technologies that might need some sort of government and policy support. The Portuguese government has announced a hydrogen CFD aimed at increasing demand of green hydrogen, but by closing the gap, the cost gap, I should say, to grey hydrogen, for example, or to gas. So we discussed a bit earlier kind of what sort of government interventions might be required. In this case, I guess the approach is to help incentivize demand for green hydrogen as a building block to then help support the technology. Do you think this type of mechanism is the right one to incentivize investment, or given the scale of the investment required, is something else needed? You know, the governments need to step in with a kind of heavier hand when it comes to hydrogen, for example, in the same way they did with renewables early on?
It's a very good question. How best to provide the environment for the sector to develop and to thrive and to accelerate that development. Definitely is a very, very good question that the governments, not just Portuguese, is doing that, but is across Europe is happening that. And I would say that a number of considerations there. One is, I think that at the end of the day, when we invest, we want to see projects that make sense and are affordable to the communities that they serve, that they are good investments, basically, so that they're not just relying on subsidies. So that's the one consideration, because we want to build, sustainable investments for the future, and these projects they are investments that are for the long term. So that's one observation that I would make. Second, in terms of the subsidies, I think they make sense as when they are to support pilot projects and small projects, but in supporting very emerging technologies, I think they need to be, taken at small steps, incremental steps, because what we saw, and maybe this is also a lessons learned that we had from the initial development of the solar technology. Obviously, when one sector is developing, the technology cost is still very high. And then if you build a lot of projects that are highly subsidized, if you wait a few years, then the cost of the technology comes down significantly. And then you have investments that could have been built at a much lower cost if you had just paced them over time. So that's something that I think everyone wants to avoid, that investments that are too big and too early. I think that's one of the concerns I would mention. But as a way to support initial investments, it makes sense, but it needs to be at a small scale, I would say.
You're right, and certainly kind of that the Spanish government did make that mistake, didn't they? So, kind of the initial kind of feed-in tariff regime, as you put it, was probably too much too early, and it definitely, I mean, it led to a huge increase in wind and solar, but at really high costs compared to what you could achieve now. And unfortunately, it also led to a slowdown in the industry for a long period, right? When it could have been, the targets could have been achieved at a kind of cheaper in cheaper ways. And so yeah, that's the age-old challenge, I guess, for policy makers, is how do you incentivize kind of some of these technologies without kind of blindly betting on them being the technology at the right time. And so yeah, getting that right, I completely agree. It's very challenging, but also very important.
Yeah. And the flip side is, what we are seeing these days on the solar auctions,
Yes.
which is very interesting, isn't it? Whereas at the beginning of the sector, governments were supporting, and they were basically providing very high subsidies to these projects. These days actually is the opposite. So these projects can be built unsubsidized, or where the government is offering a PPA that is below the market price, which is basically capturing value for the state, for public money, basically being raised on these auctions, like in Portugal, for example, and also in Spain, for more limited number a few years ago. But so that's very interesting. And one dimension is which is, I think, quite interesting as well, is to see how these savings on these auctions will be applied, whether they will be applied to support the energy transition. So that could be an idea, like these auctions, they are basically money for the state, because they are these, particularly in Iberia, they achieve prices that are much below the market price, whether these funds could be canalized to support the energy transition. Just a thought, Anna.
Absolutely. No, absolutely. No, you're absolutely right. And there will be costs that come from other investments, right? And so there is a question about how much of the gains that you've made in renewables, for example, should then be applied to support other types of investments, like in hydrogen, for example, electric vehicle infrastructure, etc. And there's one final question, and you touched a little bit on this before, and that's the opportunities that there are, I guess, for infrastructure investors. So one thing that I think it's true is that infrastructure investors can't complain about the amount of investment opportunities available across the globe. So if you look at just Europe, for example, we see a lot of activity, as you said, in wind in the Nordics, or solar in Iberia, Italy, and Greece, batteries in Ireland and GB, offshore wind in GB. And that's without even covering the growing interest that we are seeing in things like hydrogen. So, with such a wide range of investment opportunities available to support the energy transition, how does InfraRed think about the geographic and the technology diversification when you make investment decisions? So, how do you choose where to allocate the capital that you have?
We like diversification, and we also like to see and to invest in projects where they make more sense. Like you said, in Iberia, solar is incredibly competitive. In the Nordics is wind, that they have very high load factors. And we have this possibility of funds that invest in various sectors and various geographies. Some are global, some are European. So we have this opportunity to arbitrage amongst the various opportunities and deploy capital where it makes more sense, and the best investments that we can find. And in Europe, I think we can really select where we don't invest in all sectors, in all countries. We are selective, but we can also invest where it is best, and if we're talking about the energy sector, we can see well where the COE is lowest, or where is the best conditions for a certain type of investment. And that diversification is really positive in terms of portfolio construction and creating a return in a fund that is basically resilient, because it's not just predicated in one sector or one geography. Is really underpinned by diversification at portfolio level.
Absolutely, and that's super and super interesting, and also something that we see, I guess, being paid more attention to, the benefits of thinking about your investments from a portfolio perspective. And when you think about kind of solar and wind, for example, they do complement each other in many ways. At a seasonal level, we've seen kind of high degrees of negative correlation, for example, between kind of how windy it is in Iberia in one year versus how not windy it is in the Nordics, for example. And so all of those things do have an important role to play in choosing the investment, but also then ensuring that your portfolio is robust, right, to kind of weather risk, of course, and by that I mean just frankly the weather year effect. So how windy and how wet a year is, but also the long-term uncertainties associated with a portfolio in an industry that is by nature kind of based on long-term investments, and where things can change very rapidly.
Absolutely, yes.
Dulce, it has been an absolute pleasure talking with you today. Thank you very much for taking the time to speak with me and to share your views with our listeners.
Anna, it was a pleasure. Thank you for inviting me.
That was Ana Barillas, Head of Iberia at Aurora, speaking to Dulce Mendonça, Director and Fund Manager at InfraRed Capital Partners. Do keep an eye on our podcast feed for more in-depth conversations with senior members of the energy industry. The best way to do this is to subscribe on whatever platform you use. Thanks for listening, and goodbye.